Hello, and welcome to this week's show. Thanks so much for joining us today. I'm your host, Trey Winowitz, and you're watching Right on the Money. Our goal for the show is to always equip you, the viewer, with accurate financial information so that you can make educated decisions for both you and your family. We've got a great show lined up for you today, so thanks for watching. We're going to be tackling some difficult financial questions, and we want to take some things that could be somewhat complicated and make them simple and easy to understand. So come on in and have some fun with us.
In the aftermath of Hurricane Katrina, Trey Winowitz was forced to move himself and his family over 600 miles north and begin his financial planning practice again, from scratch. Since then, Winowitz Financial has become a national success story, establishing itself as a trusted source for financial advice in and around East Tennessee. In return, Trey gives back to the community by sponsoring monthly educational workshops and annual charity events. He also hosts a weekly radio show informing and entertaining those in need of financial advice. So, if you'd like to understand more about today's challenging financial environment, if you'd like to overcome your current financial situation, and want to learn from someone with a track record of overcoming, stay tuned for some trusted financial advice that's right on the money.
Now let's get to today's main topic, refinancing in or near retirement. I can't tell you how many people have come in after listening to my radio show or seeing me at a seminar, and they wanted me to help them review their financial situation. Then we stumble into realizing that they haven't checked into refinancing their mortgage, which can be a really important puzzle piece that helps complete the overall picture of retirement planning and financial stability. Now, I've got an article here from the Wall Street Journal from their online site called Market Watch, and the headline says, "Tempting low interest rates continue to make headlines, making refinancing your mortgage seem more attractive. But when retirement isn't far off, the decision of refinancing can get more complicated." Why? Well, that's what we're going to talk about on today's show. We're going to talk about, number one, why should you think about refinancing? The 2% rule and why it doesn't always apply. When should you not refinance? And should you do a 30, 15, or a 10-year term? Now, before I forget to tell you, a few months ago, a really good friend of mine, which I go to church with, owns his own mortgage company. He told me he was looking for some office space. I didn't think much of it until the next week when I had 5 people come in the office and ask me to help them decide if they needed to refinance or not. And I started thinking, I bet my friends and clients could gain a huge benefit from having access to a mortgage company that they could trust when they come to us for other financial help. So when I built our new offices on Lovell Road, I put some extra space in and invited my buddy to come join us in our new building. His name is Chris Hogarth, and his mortgage company is called Executive Lending Group. Chris has over 12 years in the mortgage industry, and my clients love him. Give me a call at the office and make sure that you ask about the friends and family discount that you can receive on your closing costs also. Having an in-house mortgage company allows me to make sure that my clients aren't overpaying in fees and costs associated with their mortgage, in the same way that I help people make sure that they're not overpaying on fees on other investments. Now, we've got to take a quick break. I hope you can stick with us. This is going to be a great show. Stay tuned for more trusted advice that's right on the money.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Thanks so much for joining us. I'm Trey Winowitz, and you're watching Right on the Money. If you're just tuning in, we're talking about refinancing in or near retirement. And I've got an article here we've been working from the Wall Street Journal, from the section called Money Watch. The title of the article says, "Refinancing near retirement can be smart." That leads me to the question I want to consider on today's show. When should you think about refinancing? The article says, if you haven't refinanced in the past few years, your monthly savings can be substantial. For those with a current mortgage near 5%, refinancing could mean significant improvement on their monthly cash flow. Now, maybe you're watching this and today you're thinking, well, that sounds like good advice, but what about the 2% rule? My answer is, like a lot of other rules of thumb that you've heard over the years, some don't work anymore due to economic changes and other things during the time. I mean, look at what's happened in the last 10 years, even 5 or 2 years. We're in a rapidly changing financial environment, and you have to adjust the way you think in order to be successful in today's world. Let's work through an example of this rule to illustrate what I mean. Let's say your current mortgage rate is 10%. What does the 2% rule say? Wait till it's 8%, right? This will give you a 20% lower rate. But today's mortgage rates are in the 4 to 5% range. So what if your mortgage was 4% and we lowered it to 3%? That's only a 1% change, right? But guess how much it saves you on the rate? 25%. That's right. So here's my tip. Sit down with me and let's do the math. If the math says we do it, then we do. If not, we don't. It's that simple. Give me a call at the office and make sure you ask for our friends and family discount that you can receive on closing cost. Or better yet, stop by our new office on Lovell Road. Meet with Chris and talk about all your options available for your mortgage today. Now let's talk about when it's not a good idea to refinance. Looking back at the article, it suggests that you first should examine the time frame left on your loan and how much of your payment is going towards principal. Regardless of your personal time frame, if you've got 10 years or more left on the existing mortgage, there's a chance it might make sense to refinance. With more than a decade to go, you're not applying as much of your payment towards principal. Now, in dealing with clients personally making the same decision in the last 90 days, what I've found is if your current loan is roughly 7 years or less, it may not make sense to refinance. However, you may have 5 to 7 years left, as well as a few cars to pay off, credit cards, or other debt to consolidate. Then refinancing may make a lot of sense. Now, we've got to come up on another break, so I hope you can stay with us for more trusted advice that's right on the money.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
Are you looking to recruit and retain great employees? Would you like to reduce your retirement plan cost? Now you can offer employees the opportunity to keep their retirement funds protected and growing. Separate yourself from your competition. Make a difference in the retirement of your employees with little to no additional cost to you and no change to your TPA, payroll, or existing 401k company. Call Winowitz Financial today to find out more about this exciting new product.
Thanks for joining us. I'm Trey Winowitz, and you're watching Right on the Money. Today we've been talking about refinancing in or near retirement. We've already covered why it might be a good idea, the 2% rule, and when you should not refinance. Now let's talk about what type of loan you should consider. Should you do a 30, 20, 15, or a 10-year loan? Like with all your investments and your retirement, I like to err on the side of conservative with every financial decision. That means with your investments, we don't chase fads or sacrifice safety for a little bit higher return potential. We just give you solutions that work over and over, and in return, you get to sleep very soundly at night. How does this apply to your thinking about mortgages? Well, I think it does a lot. Would you agree that in the past 5 years, there's been dramatic changes in the job market? Are there things which are affecting your money and financial decisions now that are completely out of your control? The European crisis, natural disasters, and here in other countries. Iran and Israel conflict, politics, interest rates, and I could go on. My point is, if your goal is to pay your home off as quickly as possible, I'm all for that. but I want you to have a plan that's coordinated. Over the past few months, here's what I've found in helping people just like you go through this process. So if you compare 15-year rates, for example, to the 30-year rates, I'm sure you'll see 15-year rates are lower. But also the payments are higher because the term is shorter and the loan's amortized over a shorter term. Now what does that mean for you? Well, if you do the math, you'll find that if you take the difference between both payments and pay it automatically towards your principal, you can pay your house off in almost exactly the same amount of time. Why? Because banks have most of the interest paid up front because they know most people won't have the loan for the length of the term. So what's the big deal? Well, why would you want a little lower obligated payment for the next 15 years of your life? Well, I'll tell you, a few clients have come to see me lately because they've recently experienced one or more of the following things: job change or job loss, a death in the family, emergencies with children, grandkids with an emergency, auto accidents, and there are others. The point is that the most conservative plan is to have the least monthly obligation, not just the shortest term. Then you can still control when you pay it off. You can use the extra money and put it directly towards the principal. If an unforeseen circumstance comes, then you don't have to worry that you can't make your mortgage payment. Now, if you don't think you have that discipline, or you don't want to do that and simply want to refinance to a 20 or a 15-year loan, we can do that too. Believe me, it's your plan. I'm the advisor, but you're the boss. I'll show you all of your options on paper, and you get to choose which one works the best for you. Now, doesn't that sound like how you'd like it to work? Our bottom line for today is this: rules of thumb don't always work. You always want to verify the math. It doesn't lie. Then you want to meet with a qualified professional to go over all the options. And don't forget to give us a call about our friends and family discount on a purchase or refinance. Coming up after the break, we'll learn how people just like you benefited from a no-cost second opinion. You won't want to miss our Money Matters segment.
Are you looking to recruit and retain great employees? Would you like to reduce your retirement plan cost? Now you can offer employees the opportunity to keep their retirement funds protected and growing. Separate yourself from your competition. Make a difference in the retirement of your employees with little to no additional cost to you and no change to your TPA, payroll, or existing 401k company. Call Winowitz Financial today to find out more about this exciting new product.
I don't know about you, but what's been going on in the U.S. economy, and especially Europe, scares me. There are too many things that we can't control affecting our investments. We have to do our best to educate ourselves about the best options out there to protect our nest egg. The best way to do that is to call Winowitz Financial and reserve a seat at their next free educational workshop. There's usually a waiting list for these, so call today to reserve your seat. 691-2433. That's 691-2433.
Now that we're back, I'd like to tell you about some real-life folks that you can relate to, because it never hurts to have an extra pair of objective eyes take a look at your situation and see what can be improved. But sometimes not getting a second opinion can be very costly to your family. Even if the strategies you're using can't be improved on, people say it's a huge comfort when I tell them that what they're doing is working well for them and they should continue with that plan. However, in some cases they discover that products or strategies that they thought worked a certain way actually don't work that way. So what I want to do is take a second to introduce you to a few people who came in my office recently for that no obligation second opinion, just to be sure. And these folks are glad that they did. If you'd like to be a part of this Money Matters segment, please give us a call at the office and schedule a complimentary review. Now let's take a look at this week's case. Jana, can you bring me my notes?
Sure.
Thanks. Our case study this week involves a 56-year-old nurse and a 59-year-old sales manager, both from Maryville, Tennessee. These folks came in after attending one of our financial seminars and educational events. Their main concerns were the cost of insurance. They weren't really sure if they were overpaying for their life insurance. They also weren't sure if they were going to be able to retire on the timeline that they were looking at. And also they wanted to add some guarantees, a little concerned about the uncertainty, a lot of the volatile things that were going on in the economy. So those were their main concerns for our visit. The steps to success. For these folks, we did what we do a lot of times. Being independent, we shopped their life insurance with a whole bunch of different A-rated carriers. Then we reviewed their current 401k plans, their contributions, the investment objectives, and all the different investment types as well. And then we analyzed their other accounts. They had a few Roth IRA accounts, one each, and also some traditional IRAs that they had been contributing to over the years. The results that we came up with for this couple was, after shopping, we found some 15-year guaranteed level term insurance that saved them about $30 a month. So for the next 15 years, they're going to save $30 a month, and they can now use that to contribute a little bit more to their 401k plans and achieve that company match. Then we also enrolled them in a 401k monitoring program. This is where we have a professional manager that will take a look at your 401k individually and give you recommendations on where you should invest the funds, when to put the money in or take the money out. So that was a very big help for them. Lastly, we compared some annuities that they had been shopping for. We found some that were no cost, and they had some guaranteed income accounts on them. So bottom line is, at the end of their retirement years, when they start collecting Social Security, with these guarantees, they're able to achieve about $10,000 extra every year of tax-free income from their Roth IRAs. Give us a call today for a complimentary review, and if your scenario gets picked for the show, you're going to receive a right-on-the-money prize pack. But most of all, we want to help you. Coming up next, another opportunity for you to be a part of the show. Post it on our Facebook, tweet us, or email us your financial questions, and stick around for the viewer mail section.
Are you looking to recruit and retain great employees? Would you like to reduce your retirement plan cost? Now you can offer employees the opportunity to keep their retirement funds protected and growing. Separate yourself from your competition. Make a difference in the retirement of your employees with little to no additional cost to you and no change to your TPA, payroll, or existing 401k company. Call Winowitz Financial today to find out more about this exciting new product.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity, and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
Welcome back to Right on the Money. I'm your host, Trey Winowitz, and it's time for you, the viewer, to be an integral part of this show, Viewer Mail. This is the part of the show where you send us your questions about anything financial. In order to get your questions to me, you can post them on our Facebook page, tweet your question to me at TreyWTV, or email them to me at advice@TreyWTV. If your question happens to get answered for the show, you'll receive a Right on the Money prize pack just for your willingness to help out our other viewers. This package has a retail value of over $50, so please don't stop sending us those questions. Our first viewer mail question today is, we are looking to refinance our home since interest rates are low. Should we refinance from a 30-year to a 15 or a 20-year? You know, I've gotten that question a number of times this week in the office. There are a lot of factors that go into an accurate answer to that question, but interest rates are still extremely low, historically speaking. Until I can learn a little bit more about your situation, my guess and my answer is maybe. We may be able to find a little bit more efficient way to have the house paid off in 15 years, if that's your goal. For our Right on the Money viewers, we have an in-house mortgage broker to help us work through all of these specific questions. Give us a call and we'll set up a time for you to sit down with Chris at Executive Lending Group, and we can always work through this with you. We'll put our heads together. You might be surprised at what we can come up with. So keep those questions coming. Thanks a lot. And our next question is, I have some extra money Should I pay off my mortgage first or start investing in my 401k? That's a great question, but let me ask you another question first. Does your 401k have a good match? If it does, I would try to make sure you invested in that first and took advantage of that extra money. After that, then if you want to sit down with a qualified professional, see what other options are out there, if it makes sense to pay off your mortgage, the answer to that question should always fit into your overall financial needs and goals. The last question we have time for today is this. What is a real estate trust and are they a good idea? Like any investment, some investments may not be suitable for certain people. REITs in general have qualifications on investors based on net worth, income, and liquidity, mainly because of 2008 when the real estate market dramatically crashed. Some of the companies had to suspend some of their distributions based on the real estate values. Now, while some have attractive dividends, they also have attractive commissions for some of the brokers. Now, when appropriate, we use some of these for our clients, but out of all of them that I've looked for, there's only about 2 or 3 that I would personally recommend. The other thing that we do is if we purchase them, we buy them on a commission-waived basis for our clients. In my opinion, this would be better for you. Be happy to sit down with you to see if this type of an investment would work for you. Just give us a call at the office and we can look at it on an individual basis. Stick around after this short break for Right on the Street. See what some local people just like you think about the stock market and other financial topics. You may actually see someone that you know.
Are you looking to recruit and retain great employees? Would you like to reduce your retirement plan cost? Now you can offer employees the opportunity to keep their retirement funds protected and growing. Separate yourself from your competition. Make a difference in the retirement of your employees with little to no additional cost to you and no change to your TPA, payroll, or existing 401k company. Call Winowitz Financial today to find out more about this exciting new product.
I don't know about you, but what's been going on in the U.S. economy, and especially Europe, scares me. There are too many things that we can't control affecting our investments. We have to do our best to educate ourselves about the best options out there to protect our nest eggs. The best way to do that is to call Winowitz Financial and reserve a seat at their next free educational workshop. There's usually a waiting list for these, so call today to reserve your seat. 691-2433. That's 691-2433.
And we're back. This is Right on the Money, and I'm Trey Winowitz. See what some local people just like you think about the stock market and other financial topics. You may actually see someone that you know. If someone's using a buy and hold strategy, when should they actually sell?
They should go to their financial advisor and ask them.
Okay. As far as just financial advice, do you use a financial advisor?
I married one.
Concerning financial planning,
Yes.
do you feel like it's difficult to get a grasp on things? Do you think there's enough education out there as far as for the consumers regarding financial planning?
The probably is, but it's confusing to know where to look, what sources are reliable, and what you can actually trust.
If you're using a stockbroker, when do you think your stockbroker would tell you to get out of the market?
Well,
I want a financial advisor who stays on top of things.
Okay. Do you use a broker or an advisor?
We do.
Okay. What do they make, or how do they make money?
That's a good question.
Okay. Do you have any idea how much money they make off of your
Just
account?
follow me. I do not. I won't
Okay.
get you
Would
lost.
you like to be one of my clients?
That could be a possibility.
Okay. As far as your brokerage account and stuff, are you paying any fees, or do you know what the fees are that you pay on your investments and your brokerage accounts?
Sometimes it's hard to find those fees.
I agree.
Yeah, we pay fees and we don't know how much they are.
Okay. Would you like to sign up to be one of my clients then? Financial planning, okay, in general, do you feel like that's kind of a complicated thing, or do you feel like it could be simple?
Person, so just hang on, and doesn't go systematically through things with you and explain things. Just says, trust me. I don't want that kind of a financial advisor.
What about fishing? Do you like to fish?
I like to fish.
What do you like to fish for? Can I borrow $20?
What do you need it for?
Anything. Lunch?
Not a good answer.
Okay. Thank you guys. Thank you. So, last question. Can I borrow $20?
Sure, anytime.
Hey, man, thanks a bunch. And can I borrow $20? Okay. And we're back. This is Right on the Money, and I'm Trey Winowitz. We're just getting ready to wrap up the show, but before we go, I'd like to tell you about an old Louisiana tradition called lagniappe. Lagniappe means to give someone a little something extra. And the way that we want to do that here at Right on the Money is to brighten your day at the end of our show. So with that, here's a little lagniappe for you. Now for all of you out there who are married, were married, or maybe you wish you were married, this is something to smile about the next time you see a bottle of wine. Sally was driving home from her business trip from northern Arizona. She saw an elderly Navajo woman walking on the side of the road. The trip had been long and a quiet one, so Sally decided to stop the car. Then she asked the Navajo woman if she'd like a ride. With a silent nod of thanks, the woman got into the car. Sally resumed the journey, trying in vain to make a bit of small talk with the Navajo woman. The old woman just sat silently, looking intently at everything she saw. Studying every little detail, she noticed a brown bag in the seat next to Sally. "What's in the bag?" asked the old woman. Sally looked down at the brown bag and said, "Oh, it's a bottle of wine. I got it for my husband." The Navajo woman was silent for another moment or two, and then speaking with quiet wisdom of an elder, she said, "Good trade." And that, my friends, is a little lagniappe for today. I want to personally thank you for watching our show today. I hope you found our show helpful as well as a little bit entertaining. If there's anything at all I can help you with financially, please don't hesitate to call our office. And remember, any plan that we come up with will always have three main goals for your money. Safety first, or protection of your principal, is always number one. Making a reasonable return on your money in what some would consider an unreasonable market. And number three, keeping your plan simple and easy to understand. If that sounds like something you want, I know I can help you. Also, please keep the financial questions coming. We'll do our best to get them answered on the show. I'll see you next week at 3 o'clock for more trusted advice that's right on the money.